it takes a lot of time, obviously. Okay. And also you have to know it like the back of your hand, like anything else. I mean, I'm not a mechanic. Like I own a lot of cars, but I couldn't fix one to save my own life. Like I don't know anything about them. So my checkbook covers the expenses for those types of things because I don't know them like the back of my hand. I spent my entire life doing this and developing algorithms and doing things that would bring more precise understanding, insight, execution, delivery. And, I'm pulling that veil back, letting you see what goes on. And I see these folks, and believe me, I'm not troubled by this, okay? But I'm fascinated still, even with this degree of showing you where it's going to go, telling you what candle to focus on, and it's live. Like you can't do better than that. You can't cherry pick that, okay? But hey, I got a challenge for all of you out there that like to say these types of things, and any of you that don't really subscribe to the view that people that don't like what we're doing or whatever. I would like for you to set out a task for yourself to try to cherry pick and execute like you see me doing. You can use as many computer screens as you want, but do it like I'm doing it. I would love to see that. I absolutely would love to see it, but it has to be in live market data. It can't be in market replay, okay? Because I'm not doing market replay, as you can see. For the folks that have been on the fence about what it is that I do, how I teach, what the benefit of it is, what's the outcome of putting in all this work? What's the payback for deferring all of your weekends and your evenings watching sports and such? I know some of you still sneak and do that, but you have a lot of study time, a lot of work that you got to put into this year. I'm putting it in there too. So you're going to be expected to be studying much more than the average person, even more than what I put my mentorship through, because I'm going to be giving you, obviously, live sessions. You got to go through those, and there's going to be commentary every day, Monday through Friday, and there'll be also homework assignments. And I'll try to be brief about what it is I want you to focus on. But if you don't do them, and if you're just going to be the type of person that just waits to see what everybody else tweets and responds to me, and just say, okay, well, that was equivalent to me doing it. I get it now. That's why a lot of folks that watch my content, they want to hear the summary. Give me the summary. Give me the cliff notes. Give me the PDF that's condensed down to one paragraph, so that way I ain't got to worry about watching all this stuff or listening to this guy. And what you see me doing in my executions and management and identifying what it is I'm expecting in the marketplace, typing it out in annotations, you'll never get that unless you listen to why I'm doing certain things when I don't like to see certain things, and market environments, certain market environments that are prone to produce conditions that are just, unfavorable, difficult even for me. And this afternoon, that was difficult for me. I mean, you might look at that and say, well, shit. I mean, you were all over that thing like white on rice. I was still telling my son that was walking up to me and wanting to ask me a question, said, not now. My wife came up to the office and she says, hey, and I said, not now. And of course, I'm dead now. I got to pay the price when I join her in the typical evening. You know what husband and wives do. I'm going to be punished. But I was trying to dial in, and I have to have an absolute 100% undivided attention when it's like that. And because it's very difficult for me to have that, being, wired the way I am, I try to avoid those conditions. And to make it easy for me not to have to do a lot of those types of trading environments for teaching, I just teach my students to try to avoid those conditions. So one might look at that and say, well, that's a shortcut. It is. It saves me a lot of insanity because I know, well, look what I was doing. I could literally teach just the afternoon session I did today. I could spend the rest of this year teaching all of that. Just that one session what I was doing. That's how deep this shit gets. Like, it's a lot. There's a lot of things that are going on, and you don't see that. You don't know what's going in my decision making, what processes I'm going through in my mind, all on a 1 minute chart. Still annotating, still keeping my train of thought about what it is I'm watching. So there's a lot of things going on. And there's no fucking way that I could be doing that with another screen, typing it in something else. I'm constantly doing that one screen on a market and to a level I've already called. You have to be doing those types of things. In the early stages, you might think, well, big deal. He's bragging. I'm not bragging. I don't need to brag. I'm really good at this. I don't need to brag about it. I've lived it. What I'm teaching you to do is screenshot it like I'm showing you. So that way you can save these moments in your journal, because we've talked about very specific price levels. I'm not ambiguous. I'm not saying up and down. I'm taking your attention to right to a specific level, not a zone. Because if you don't understand what it's going to gravitate towards, you have no chance in being consistent. You'll be like the people out there on YouTube that are starting their live streams with $4,800 and shitting themselves all day long, thinking they're smart. You can't do those types of things. You can't. You have to go in, look for specific things to repeat. How do you know that they're going to repeat? By screenshotting them. Screenshot them over and over and over again. And what it does is it gives you a snapshot of a memory that once you look at it again and with annotations on it, saying, this is the sell side liquidity you're looking for, not just a blank chart at that level. Like, you have to dress the chart up. That way it records the moment of what it is that you were expecting to see in price. And that little tiny photograph is like, to me, they're in many ways, they're like pictures of my children. When I have my algorithm constantly giving me photo opportunities, I still do it. I may be out and about with my wife. I may be doing other things. If I see it on my phone, I screenshot it. Now, I know what I'm looking for, but you don't necessarily know what you're looking for because you're so new. So you want to spend time doing this a lot when price is going to go to our levels. When I'm specifically calling a level, I'm teaching you to predict a bias. Now, earlier today, when I sent out the tweet, I said, as long as we were beneath the 1040 fair value gap, if we're below that, then I'm going to be looking for the 4,000 and the 3,096.75 sell side liquidity pool. Notice I gave you very specific levels, not some random area or a zone. It's very specific levels. Now, we didn't get the levels delivered to during the day session. We had to wait for the 6 o'clock restart when the futures market takes the hour off from 5 to 6 o'clock every day. But it opened up, immediately just melted. So admittedly, I don't like to hold over during that break because anything can happen. I mean, they could drop bombs somewhere, something, anything can happen. And that's what makes me love more than anything now that I am a proficient day trader and not being willing to hold overnight. I don't want to do those types of things anymore. It's too much risk. The gap risk in doing that, there's no way of measuring it. Like, it could do crazy things. And if you're trading and holding size, an unfavorable opening could undo you quickly. And it's not something you want to really invite that level of risk on. Do you go out there with a funded account just simply because you get to that point and start trading like that because you see me doing it? I don't believe you should. I believe you should just do one contract. Because knowing how to pyramid, build your positions up, That comes with a great deal of experience. And too many times folks think they have that skill set and they quickly find out they don't. And then when they don't have it, that frustration makes them feel like that's the only way they could have been profitable. And that's a lie. That's something that plagued me early on when I was trying to build in pyramiding. Back in the 90s, when I was trying to do these things in bonds and S&P, it was scary for me to do it because I was doing it the opposite direction, or not direction, but I was going with one contract, then doing 2 contracts on my second entry, and then 4 contracts on the next one, and then 8 contracts on the next one. See how fast you're building the position up? And very little movement against you has a great deal compounded effort in drawdown. Versus where I start with my largest position that makes the most sense, which is less than 1.5% usually. And then what I'll do is I'll build in the largest position entry first, split it in half, put the next one in as I have equity, or if I feel like I'm scaling in a better position size, that I'm getting more insight, like you watched me do today in the PM session. I was literally putting on entry signals or trades. Every one of those could have been your unique model. Every single one of them. So that's how many trades I can see in a small fractal on a 1-minute chart. And it's even more when you drop it down to a 15-second chart. You get 4 of those candles per minute. So it allows me to have a great deal number of opportunities and setups, as long as I know where the market's likely to go. And it's the time of the day when it should deliver. Morning session hours, evening session hours, PM session. I'm confident I'll find a setup every single day. And you're being made privy to what it is I'm using as the draw, like the magnet on price, that idea of what makes price go where and why. That's the experience I'm lending. I'm telling you the future with my 30 years of experience of knowing where it's likely to go next. And because I'm teaching you by showing you example after example, I've seen still people saying, what's the point of these videos? You put videos up there with music. I don't like that. I don't like when you send me a tweet like that. How about that? What am I supposed to do with that? I'm not going to bend to what you want me to do. I'm going to do how it entertains me, and I know it works. It may not fit you. Just turn the music off and just watch the chart and go into your own charts and annotate what you see me doing. Because if you just watch the videos, the little vignettes, the small little ones, 2 minutes or whatever on Twitter, and that's all you did, just watched it, you wasted your time. Because I'm showing you in a very small, encapsulated portion of time, an entire thought process. And I'm showing you how I'm in alignment with the algorithm. I'm placing myself exactly in the marketplace when the algorithm is going to deliver price a specific way. And just having that recording saved on your phone or saved to your computer and saying, I got that saved, it's in the archive of ICT. That's waste. That's doing nobody any good. So what? You have it saved. I'm not deleting anything. You don't need to worry about it. But you need to go into the chart in the video and match up what you see on your chart and annotate that. There may be questions about what it is that made me have a concern about that specific level. Okay. And you take that question and you put it into a topical area in your journal and you write the question out. And then you keep watching what I'm doing all year long, and you're going to find the answers to those questions because I'm going to invariably answer it. And that's what I say all the time with folks that come to my channel. They're all worried about, where do I start? Start wherever you want to start. Really, there's no real perfect way of doing it. But if you want to, take advantage of what I'm doing this year, you want to be joining what we're doing right now. Because it will force you to see what it is I'm showing you right now. You'll also see that I can do it. You'll see that the market does, in fact, go where I'm outlining beforehand. And it's fun. It's an amazing interactive study that for a number of 6 years or so, only my private group had the opportunity to see this type of stuff. And we did this every day. every single day for years, every single day. Okay. And you've probably listened to people and heard people or seen things that were made up and photoshopped and contrived and or conjectures on people's or opinions for folks that were never with us in our community. Okay. I've opened up and now showed all of you, and you're getting to see it. So hopefully it encourages you. Hopefully it's not just a matter of, being viewed as me showing off, because I can show off. Believe me, this ain't showing off. I'm teaching you, and I'm giving you example after example every single day, every single week of these things repeating. So that way, number one, the concern that most of you have is that, can anyone do this? Forget that you don't know how to do it yet, because everybody doubts whether or not they're going to be able to do it. But the question is, do you have someone teaching you that can do it? Because I can't do it if I can't prove it, if I can't show you what it's likely to do, and I can't execute, and I can't manage a trade with a stop loss and build in a larger position. How many times have you seen me do it? It's the same thing every time. Precision, precision, precision. And it's going to levels I've outlined beforehand. So it's allowing you to take the fears and the anxiety that you have, which is reasonable. That's normal to have that in the beginning. Everyone has that. But I go out of my way to try to make it, encouraging. Because even though you know in your heart you can't do what I'm doing right now, you know that I can, so therefore I am an authority in this, because I can show you and I can tell you beforehand what it's going to do. And because I'm doing it repeatedly every single week, that shows consistency, it shows continuity, and it shows prowess. So that way it dismisses and disarms, in my opinion it should, the students that are guarded. They feel like, I don't want to do too much investment of my time and energy in this, because this could be a scam. Oh shit. If you can't see this now being exactly what I've always said, honestly, even the live streams aren't going to do it for you. It's not. And it's fine. If some of you don't want to learn this, that's fine. You don't have to. There's plenty of room for the folks that want to learn it. And it ain't going to diminish the effectiveness if you don't or do. I'm going to still do it, whether you like to do it or not. And I believe that if I had this coming up, like, I would literally be walking around like bouncing, excited. Because when I was first learning, I didn't believe this type of precision, consistency, foresight, and understanding about what price is going to do. I didn't believe that was even possible. I thought it was just like, well, once in a while people get lucky. This ain't luck. This is technical science. These things are measurable, they're repeatable, and it's a transferable skill. Look in my timeline. You can see folks that did these trades themselves. Not exactly like mine, obviously not to that degree, but they were still getting in the trades without me telling them how to do it. You know how they got there? Logging, journaling, studying, back testing, all the boring things that most of the students that come to me and quit or fail or complain or just say, well, this guy's probably a fraud because I couldn't learn how to do this. He complicates it. How complicated is knowing a level that it's going to likely to reach to, wait for a displacement in price in that direction, wait for a fair value gap to form, wait for it to return back up into that fair value gap if it's going to go lower, and then engage it, put the stop above the fair value gap, and then ride it out. How hard is that? Like, that's the easiest way of trading there is. You don't need any trend lines. You don't need any kind of indicators. You don't need anything except for reading price. Like, that's easy. There's nothing simpler than that. There's nothing out there simpler than that. You don't even need to put a moving average on there. What do you need the moving average for? You already know what the draw and liquidity is. It's dumb. You don't need a moving average. You need none of that stuff. You need a clock that has the right time for New York time, and you need the open, high, low, and close. That's it. 1 minute, 5 minute, 15-minute, hourly chart, 4-hour chart, or daily. Whatever you want to use, they'll all deliver price. But a move on a 4-hour chart isn't going to have as many opportunities to enter and engage that a 1 and 5 minute chart would. Like, I can get in all kinds of trades and build up a position, enormous position, like putting new links on a chain from the main parent entry and all the subordinate entries that would be after that one. It's just simply just adding another link. So it's a chain reference from where I'm entering to where I'm thinking it's going to go. And that link of chain is just adding more, links to the chain from where I want to be in the marketplace initially, and where I believe the market's going to go, or terminus, final target. I'm having fun, and I see the feedback, and I see the folks that are really engaging and studying and proving that they're putting forth the effort, not just casually Netflix viewers. And now I feed off of that. Like that gets me going. Like it motivates me. But I don't want any of you to take what I'm showing you in these examples as you're going to be able to trade just like that after this year. That will not happen. That won't happen. But you will be able to use that model I taught last year on YouTube for free. You'll be able to trade that model proficiently. Without a doubt, you'll absolutely know what you're doing. You'll know how to determine the bias. You'll be able to tell the bias for the day. You'll be able to tell the weekly expansion direction, where the most expansion will occur for that week coming. And you'll know the bias for each individual session, and you'll know when to avoid it. And I think if you learn those skill sets and you have done the work in studying what my entry criteria is for a fair value gap, a breaker, an order block, optimal trade entry, something to that effect, you'll have what you need, and you won't need to do anything else. You won't have to stay hand in hand with me. You won't have to keep coming to my channel, and you won't have to go to anybody for anything. You'll be an independent, free thinker, and you'll know exactly how to engage. And over time, when you get to the point when you can get to a funded account and you can withdraw money, or you have your own money and you trade with live funds when you decide to do so on your own, once you start taking in that kind of extra stream of income, it encourages you. It makes you feel worthy. It makes you feel more capable as an adult. And it gives you confidence that even though things are getting expensive, and they're going to get even more expensive, you don't have to worry about falling behind in inflation, because the skill set you're learning is going to always outpace inflation. Like, do you foresee yourself worrying about the price of gas per gallon? If you can make, not just in a day, but let's just say you can make 5 figures in a week, are you going to spend much time at all worrying about the cost of gasoline, or the cost of a gallon of milk, or a loaf of bread, or clothing for you or your children? You're not going to worry about those things. And that's what I'm trying to do. I'm trying to provide a way for you to get that skill set, so that way you can live a little bit more comfortable life. I'm not promising you're going to get rich. The apt pupil can see the opportunity for something like that, but I can't in good conscience promise that. But I can promise that you will learn how to reprice. You'll be consistently able to reprice. The default and result of that is whatever you want to make it. If you want to build this up to a big, monstrosity in terms of trading revenue, who says you can't do that? Who says you can't? So it's a matter of perspective. It's a matter of what you're doing this for. And I don't want any of you to see what it is I'm showing you and think, okay, well, this is what he's promising I'm going to be able to do at the end of the year. No, you're going to be able to do one solid setup per week. One good setup that you're going to be able to find. Without a doubt, you will find one that will at least attack one of the major expenses you have for each month, and that's usually the rent or the mortgage payment. And recently, groceries is getting real close to the average mortgage or rent payment now. So if you could have that coming in, each month, that is a huge weight off your back, anyone's back, right? So I'm trying to start you like that. Get low hanging fruit objective. Think about what I showed in that ends series. You make an ends meet. That mindset, that was what I was cultivating leading into this year. So that way you know why you're doing what you're doing. You're not trying to be the biggest recipient of a payout. That's not what any of you should be aspiring to do right now. Largely because the markets are very difficult. Right now, these markets, I have never, okay? Listen, your teacher, your mentor, Mr. Everything, Mr. Wonderful, this is the hardest the markets have ever been in 30 years of my engagement with them. I've never had markets this choppy, this reluctant to move. It's spending a whole lot of time doing time distortion. You call it chop and consolidation, but it's entering longer phases of just meandering around. And you have to be very careful in these conditions, because even though there's a potential for the market to move, they can be delayed and the move take effect and do it in shorter time. But if you weren't on right then and there, you missed the entire thing. So it requires you to be, number one, patient. You need to be nimble, being able to get in and get out. And also, you have to have the skill set of knowing the condition that you're about to enter, or that you maybe have just entered a trade and you realize once you get in, oh no, I'm in the mud. Like I'm stuck. Like it's molasses. It's real sticky. It won't let you move around. And as soon as you identify that, as a new student, the best thing you can do is just collapse the trade and just view it as you protected yourself. It's like playing cards or poker. You got a hand. The chances of you winning with that hand is probably very slim. So are you going to bet more money? Some people do. They try to bluff. There's a lot of people in the industry, as gurus and teachers and such, and they compete with one another. And they like to bluff, bluff, bluff. You don't want to bluff, or try to dare the market, to arm wrestle you. And by you putting more money into the marketplace, or opening your stop loss, or removing your stop loss, that would be foolish. Your lack of experience in knowing how that is advantageous right now, because you think that it's most likely a better approach for you to be busy doing something, trading. I got money to make. I got shit to do. Let me get in there and trade. Yeah, you can't run fast, efficiently, and use very little energy if you're running in 2 feet deep of mud. It's a slow, arduous task just to get your foot up out of the mud, and then your footing is going to be off because you may even lose your balance once you get the foot out of the mud. That's what it feels like, even for me, if I'm in those kind of conditions trading. And I showed you this, the other day when I took 2 small position sizes, but I got stopped out on both. That's the way it would be for me too. So when I communicate to you as my students and say, look, I'm sitting on my hands, okay? Or I may not say that. I say, sit on your hands or be patient. I'm communicating what the analyst in me is telling the trader, Michael, what to do. So the experience, the analyst that has no risk in this, all he has is the task of analysis. This is your bias. This is what you're supposed to be focusing on. Don't do anything right now. Conditions are not favorable. That's the role of the analyst. Sound money management. And then me, Michael, the trader, has to listen to ICT. the analyst. And I have to submit to that sound logic and that experience that guided me this far. And you see the fruits of it in my executions and my teachings and analysis. But Ratchet ICT, the one that usually manifests himself here on Twitter Spaces, the foul mouth one, okay, my alter ego, that guy wants to impress everybody. Like, he wants to get out there and, do WWE style mentorship. And some of you like that. I don't, but I use it as therapy. Sometimes it allows me to get things off my chest. And once I let go of it, then I can go about my business with my family, and I won't be so high strung or wound up. I don't feel I need, obviously you can hear tonight, like, I'm not all that animated tonight. I'm fatigued for most part. I'm tired. I've been going for like 3 days pretty solid, and I'm tired. So I haven't had the opportunity to get all wound up. And honestly, the last 2 days have been just wonderful in terms of being able to teach and show you, execute, show my sons. It's just been a really nice week so far. And last week was awesome too. These are those instances, and you're going to hear me say this throughout the year. My mentorship students that have been with me for years, they know what I mean by this. But when I get in situations like this where I don't want to say, here's plan A, here's plan B, and then whatever happens, I can come back and say, see, I was smart. That's what Twitter people do. They have two outcomes. They do a squiggly line up, or they do a squiggly line down. And when one of them pans out, their followers cheer them on, worship them, lift them up on a pedestal, and say, you're the GOAT. And that drives me nuts, because that was nothing. Anybody can do that. So while at the moment right now, I have that scenario, and if I was a retail guru, I would give you the squiggly line that says it would go up to this level or it would go down to that level, and then wait and see what happens. And then there it is. And you all would say the stuff that I don't like to see. But what I do with my students is I'll say, these are the problem areas I have right now, because I can't, as a analyst, settle in on one side of the marketplace and go with a bias that's bullish or bearish. And because I can't do that, I can't frame a narrative. And because of that, I can't predict a low resistance liquidity run that's high probability. So where am I in terms of my analysis? I'm in a position of paralysis. I can't make a call. So if I can't make a call, I have to sit on my hands and do nothing and have no regrets about it. Zero. And new students lose their minds. When I first started teaching mentorship, the first time I did that, they were sending me emails like, what the hell you mean you don't know what you're talking about right now? There's always a setup. Yeah, there's always movement in price. I'm not saying that's not the case. That's clearly obvious. But there needs to be a way of framing risk, managing the risk, and does the risk invite a larger magnitude of potential profit that's going to be delivered to you within the capacity of a low resistance liquidity run? Meaning it's going to move real easy, real fast, like what I was explaining in the PM session, where we would see a sharp cascading effect in the sell side. That move, that's a low resistance liquidity run signature. When it starts, it's like, boom, it just goes there. It's like a waterfall, just, or a rocket shooting up when it goes up. It's very little resistance. That's why I dubbed it a low resistance liquidity run. It's not out in books, it's just my theory, my logic, and this is how the algorithm has been coded. So when we see price engines deliver like this, it's following that logic. And because I have no clear indication based on the things that I employ as the analyst and then engage with as the trader, I cannot allow Ratchet ICT to take the wheel tomorrow morning or stay up tonight because I'm tired and trade in conditions where I don't have favorable framework to engage in. It can get choppy. It can go against me. I'm more apt to be wrong. So I have to do what? I have to remove myself from the opportunity of getting in a trade. You ask me all the time, how do you control not doing this? And how do you keep from over trading in conditions? And how do you identify times when you don't want to trade? I just did it here. And throughout this year, when I get to those conditions and those points in analysis, and the daily calendar presents those conditions as we have right now. Some of you may be looking at this thing. I mean, I see 15 different things I could be doing. Okay, that's you. That's you. I don't think like you. I don't think like anybody. So I'm sharing with you the reasons why I'm taking tomorrow morning off, allowing for the market to create an environment that is more conducive for me to find a low resistance liquidity run signature in the PM session. It's a monumental moment in your career when you get to the point when you can identify that and have no fear of missing anything. No regret if it does move and you weren't there. Who cares? When you know how to trade, trades will be made available to you. But I can't get a one-sidedness to the marketplace. Then I have to do what I'm going to tell you now. I tell my students, I say, okay, gun to my head, this is what I would favor over the opposing side. Both of them being equal in terms of the lack of probability being on its side. Being 50-50, in other words. Okay. I don't like conditions like that. Like, it needs to be so overwhelmingly obvious, because if it's obvious and I have more signatures pointing to the market moving one direction and it's very next to impossible to frame it in an opposing direction, that is my definition of a high probability trade. And in those high probability trade conditions, low resistance liquidity run signatures will form. The quick, easy, real fast runs to targets, that's what you're looking for as a trader. But you can't appreciate that until you see me showing you example after example after example, which is the reason why I do that. I do those little videos like that. I don't need to do those videos. I enjoy them. I could just make them and have no annotations and just trade. And I would entertain myself, but you would get nothing from it. I annotate them so that way you can go into your charts and dig into those areas on even a smaller time frame, or go up to a higher time frame and see what those levels provided in terms of the things I teach.